Good morning from our global headquarters in New York. I'm Manny Scranny alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
Fed Chair Powell delivers a message: we can afford to be cautious on rate cuts. A crypto milestone: Bitcoin tops $100,000 as President-elect Trump nominates Paul Atkins to chair the SEC. And political chaos in France. Macron's government falls, and the search begins for a new prime minister. Good morning, Manus.
Danny, good morning. This economy is in remarkably good shape, and so the equity markets took it right the way up. We're just steady this morning. We're dipping into the red on the Nasdaq futures. You rallied by 1.2% yesterday. Mag 7 up 65% this year. As I say, when he said the economy is in remarkably good shape and we are the envy of the world, this market responded. JP Morgan Tactical Market Intelligence Unit say tactically long into the end of the year. Roll it over, have a look at the bond markets. How much caution was there from Powell? We need to debate that. Yields pop higher by 3 basis points this morning. He did say we can afford to be a little bit more cautious, but of course they're going to be reactionary rather than preemptive to any of the moves from the incoming administration, Danny. And Bitcoin, we made it through $100,000. Paul Atkins is proposed for the head of the SEC, and we are flying high this morning at 102,000. We're just off the highs. I mean, this is an asset which is now worth over $2 trillion. Go on the perma bulls.
Well, it's been an hour into the pre-market trading session, and crypto is certainly moving things. Robinhood, one stock pre-market, moving up nearly 4% this morning, again off the back of that big crypto milestone. And Manus, the company's announcement that they will be expanding into Asia.
And another mover on the same is MicroStrategy, rising as Bitcoin kicks through that $100,000 milestone, Danny.
And the final mover we're keeping our eye on in the pre-market, HP Enterprise earnings after the close today. Analysts there have high hopes and see strength in their server business. Manus.
Coming up on the show in just a few moments, we'll catch up with Tina Adacia of Goldman Sachs, and later this hour, we will speak to RBC's Amy Wu Silverman. Get your volatility trades ready there.
I mean, it is remarkable. I'm interested to talk to Amy about how everybody is bowled up. It feels like the bears, in the words of Bank of America, have gone extinct.
They have indeed. And volatility, I didn't realize this. Volatility in the bond market is at a 4-month low. It depends. You know, there is so much now on a rate cut for December. 77% actually after Powell spoke, which is ironic because he sounded a little bit more cautious.
Yeah, but the data was slightly weaker yesterday, and we kind of grabbed onto anything we could from ISM to ADPs.
Indeed, the ISM, the data won over the rhetoric. The markets aren't waiting for another round of jobless claims. That'll come later this morning. Fed Chair Powell underscored the strength of the U.S. economy. This is what he had to say.
We're now on a path to bring rates back down to a more neutral level over time. But you're right, the economy is strong, and it's stronger than we thought it was going to be in September. So the labor market is better, and the downside risks appear to be less in the labor market. Growth is definitely stronger than we thought, and inflation is coming a little higher. So the good news is that we can afford to be a little more cautious as we try to find neutral.
Well, let's see what Tina Adacia, fixed income managing director over Goldman Sachs, makes of the line. We can afford to be a little bit more cautious. Tina, good morning. Welcome to the show. Your take on this caution. In November, of course, the Fed chair, the economy wasn't sending any messages to be in a hurry. Do you think the bar to a pause is getting lower?
So, first of all, good morning. I think when you look at Powell's comments in context, really, they can be taken across as hawkish, but it's important to note they aren't that dissimilar to what he said at the Fed event in Dallas, and you kind of already started to see a market adjustment. I think the key is that the Fed is going to be continued to focus on data. So what we're seeing, of course, is more resiliency on the growth side. But actually, from our perspective, if you look at inflation, we still see, progress on inflation. Yes, the disinflation impulse on core and services has slowed to some degree, but you are still seeing wage inflation kind of cooling. So we do think that allows inflation to moderate. As such, our base case is probably still close to kind of market. We would expect 25 basis points this month. But then, yes, Fed to go maybe a little slower, potentially pause as need be as they kind of move towards neutral.
Tina, the fear perhaps, and I know you like fixed income, I know you like bonds because rate cuts favor them, but we've seen a movie play out in a different way last year when we thought we'd be getting all of these rate cuts coming. Fears of recession, 6 rate cuts were baked into the picture at the start of 2024. How confident are you this time that that doesn't play out again, that some of these other forces, be it political, be it inflationary forces, don't yet again mess up that trajectory and it's just another year of narrative ping pong?
Right, so here's the thing, right? The base case, I think, for us is a soft landing. So growth remaining resilient and inflation kind of coming down, which kind of sets the course for central bank to kind of cut rates. What does that mean for fixed income, to your point? I think it's quite interesting. Our expectation is that we're very constructive on fixed income. You said we're a bond investor, so of course. But we think there are a couple of reasons for that. The first is if you look at yields, high quality yields in dollar terms, 4, 5, 6%, depending on kind of what you're owning. And in addition to that, you look at kind of the central scenario, which is one of kind of positive growth. But now the tails are a little bit fatter around that than they were before. And as a result, like on the downside and the upside, you do have those tails, and markets are sort of priced almost to kind of perfection. So we think now bonds will give you that yield, stability, and most importantly, diversification. So they're going to pay you in the meantime, but they're also going to give you diversification if downside risks increase. So I think that is important now.
Let's just talk a little bit more about the tails, because one of the tails is going to be the resurgence of inflation, and that could invoke a pause from the Fed. How fat is that tail for you? Because if you have tariffs and if you have deportations and quite a serious move on immigration, that risk rises materially. How fat is that tail?
Yeah, so I think on inflation, I think that's something that the market has kind of priced for to some degree following the sort of the Republican kind of sweep. And what I would say there is maybe a little bit more of a fat tail than previously, but you kind of look at tariffs, for example, and that's probably a one-hit price increase, so maybe temporary inflation, but you would expect the Fed to kind of look through that and balance that with maybe some growth risks that kind of come to that. And so we think that still kind of gives them the base case to kind of move rates lower. But so we're probably in line with the market. We think the market is fairly priced in terms of kind of what it's expecting from the Fed next year.
And meanwhile, risk assets, Tina, have been rallying to an incredible degree. The bears have gone extinct, and that's been the case for some time in corporate credit. Spreads at a multi-decade tightness. I understand the fundamentals there of why that makes sense, but can you continue to add with spreads where they are?
Look, this is a really good and important point, and we've been discussing that a lot in our strategy discussions that we've been having over the last week, that, of course, you've seen corporate credit spreads at an all-time high. When you look back to history, though, even when spreads are this tight, given the macro conditions, as you mentioned, there is a case for spreads to kind of remain tight. And when you look at history, they can remain quite tight for longer. And I think there is some underlying dynamics that are also at play. One is, for example, if you look at the US, corporates have done a really good job in steering through higher rates, and rates are kind of coming down. You've seen pick up in consumer confidence. You've seen pick up in a lot of the surveys. So those conditions are looking much better for investment. And so we think there is a case for corporate spreads to remain tight. Saying that, I do think it is important to be cautious, and there are going to be areas that you want to be a little bit careful of. In IG right now, we're probably neutral in terms of our overall risk, and what we're instead doing is kind of focusing on security selection and sector selection. So, for example, we continue to favour financials over non-financials to some degree, and overall, I think when you look at, for example, high yield is another example. We think there's a case for high yield to again remain fairly tight from here, but again be cautious around sector selection.
Tina, let's just take you to the heart of Europe. The government has fallen, but the French-German spread is actually the lowest in a week. We've got a mini moment of reprieve in perhaps the right that we've had. How much caution would you have around French assets, or do you see this as perhaps one of those spectacular opportunities? I know Moody's have said the no confidence vote is a credit negative.
Yeah, I think, well, it's important to stress that, first of all, the short-term priority for Macron is to appoint someone to lead the government and then put the kind of budget through. And depending on the kind of budget depending on who he picks, that will depend on the kind of budget that they get. What I would say is that it's it's hard to see that there will be the fiscal consolidation that is required to kind of meet EU rules. And as a result, we do think that, yes, we've seen a little bit of rally between the French and German spread, but we do think that it makes sense for the yield to be elevated at the moment for a couple of reasons. One is that political volatility, but more importantly, if you look at the underlying debt dynamics, you could argue that French yields were probably too low and that needs to adjust. I think beyond that, I think you have to look at kind of the rest of the market and look at actually, the rest of the market has seemed pretty well contained when you look at, for example, Italy and Spain.
Yeah, certainly no contagion. Tina, really wonderful to get your thoughts this morning. Please come join us again. Tina Adacha of Goldman Sachs Asset Management. Let's get you some other top stories that are trending on the terminal this morning. Amundi is interested in acquiring control of Allianz Global Investors. They're looking for deals with the industry consolidating. Europe's biggest asset manager has been holding on and off talks with the German insurance giant now for several months. People familiar say, though, that the complexity of any transaction means that there's no certainty that it will lead to a deal.
Well, Todd Bowley's Eldridge Industries said it will launch a $74 billion asset and insurance manager. The new venture will be headquartered at the company's new office in Abu Dhabi. Bowley will chair the new entity's executive committee, and the deal is expected to close in January.
The EU's new competition chief, Teresa Ribera, is considering a potential split of Google's business. She spoke to Bloomberg earlier on the future of the tech giant.
It's something that it is, of course, on the table, and we try to work together with other relevant competition authorities worldwide, including the US competition authorities. It is important to take into consideration this potential division, the investment from some of this business case. So we will be assessing case by case.
Coming up, legacy at risk. Emmanuel Macron needs to replace his prime minister after the government loses a confidence vote. More on the story next on Bloomberg.
I'm not calling for Emmanuel Macron to resign. I'm saying that there will come a time when, if we don't take the path of respect for the voters and respect for the political forces and respect for the elections, that the pressure on the president will obviously get more intense. But he alone will have the decision, the last word.
Marine Le Pen, the leader of France's far-right party there, stopping short of calling on President Macron to resign after toppling his prime minister in Wednesday's confidence vote. The French president now needs a premier who can pass next year's budget through a deeply, deeply divided parliament. For more, let's go live to Paris, where Bloomberg's Kriti Gupta is standing by. Kriti, what now?
Yeah, Danny, we know that Michel Barnier, as you pointed out, is ousted. We know the spotlight is on Emmanuel Macron, and yet all the papers in Paris have Marine Le Pen's face on them. That's how crucial the situation is. That's how crucial her role is in what comes next. The idea here being that she should, in theory, have a caretaker, Emmanuel Macron should have a caretaker prime minister. It could be Michel Barnier. It could be several other contenders. Bernard Cazeneuve, one of the former prime ministers of France, has been a major contender for the role, among a flurry of other names as well. But the question remains, they have to come to unprecedented territory, rolling over a budget from 2024 into 2025. And this is really all just trying to hold water and stay afloat until two key dates, March 31st of 2025, which is when we have Marine Le Pen's trial, and then, of course, going into 2027 when we get another presidential election in France. Those are two key dates that Emmanuel Macron has penciled in his diary. But at the end of the day, it's surviving no confidence votes from Marine Le Pen, and now, more recently, from the far left as well.
Kriti, good morning. We've seen the markets react. We've seen the spreads compress ever so slightly. The euro has managed to breathe a sigh of relief. But what's the reality for the people of France, for the French economy? This was a sizable budget, which Le Pen said that she was doing everything. It was a toxic budget for France. But how does this translate in reality then going into 2025 for the French economy?
Well, the irony here, and perhaps a little bit of a fundamental factor that you might see in those spreads, is simply this idea that the deficit was supposed to widen substantially to 6.1% in 2025. Barnier's budget was supposed to bring it back down to 5%. A technocratic budget would pull it down even more to about 4.8%. That's the take out of Bloomberg Economics and several other major houses on Wall Street as well. But for French citizens, it means that 380,000 households may start having to pay income tax. It means that pension contributions are going to be linked to the wrong number, the wrong inflation figure, because its figures dated 12 months back, on top of increased tax bills for about 18 million households in France. So French citizens are going to feel the squeeze if the budget isn't figured out in early 2025.
Kriti, thank you very much. And we're seeing a couple of polls come through from Le Point in terms of calling for Macron to resign. 54%, Danny, want Macron to resign.
Yeah, again, it just speaks to the disarray of that government and the irony that French assets can continue to chart higher.
And, you know, in the end of the day, it's what does Marine Le Pen actually want to achieve? Does she want the scalp of Macron? I mean, he's hunkering in for the long game. The question is, will France back her in this kind of momentum? The
benefit she has is this bond market. Remember, we talked about this yesterday, that Le Pen doesn't want to be the candidate that upsets the bond market. They toppled the government, and she didn't. And that's a green flag for go ahead.
And just one other part of the poll is the majority, this is Le Pen, want a presidential election in 2025.
Yeah, elsewhere, though, we have to contend with South Korea, too.
We do. Let's talk about South Korea, because President Yoon is set to face an impeachment vote on Saturday. This is after the fallout from his martial law debacle. But the country's ruling party, which opposed the martial law, has said it will prevent the impeachment motion from passing. Do they have the votes? Denny Thomas is in Seoul. Denny, good to see you. The latest on Yoon, I mean, his own party is going to do everything, perhaps, to stand behind him in this impeachment vote, aren't they?
So yes, it's all heading towards impeachment vote on Saturday, and by the look of it, the opposition party, even though they have the control of the parliament, they would not have, or at least looks like they won't have the numbers to oust President Yoon. We had an exclusive interview with the head of the opposition party here, and he, while was adamant that Yoon will eventually go, he sounded a bit skeptical about his ability to have those extra votes pulled from the ruling party to get rid of Yoon. So that's where things are right now. We don't know if between now and Saturday, the opposition party would have convinced to get that extra 8 to 10 votes to have the impeachment voted against President Yoon. But the other equation here is that even though the opposition, also the ruling party, wants to have Yoon not impeached, they also are asking or getting into a negotiation where Yoon, leaves the party. So those are the dynamics at play right now. We don't have a real picture of whether which shape or form Yoon stays or goes out, and it all is heading to a kind of a vote on Saturday when we get a clarity.
Denny, thank you so much for that update. That is Denny Thomas in Seoul. A quick check on currencies this morning. And Manus, again, it's not just the euro that is steady. It is the won, too. It undid a lot of its losses. But that's also because the Bank of Korea stepped in, providing overnight liquidity. So for now, it is calm market. Sure, the won is a little bit weaker this morning, but I mean, nothing like you'd expect if it was political disarray and what we had seen previously when the martial law was first imposed.
Yeah, 6 hours that tanked the won by 2.7%, and we've clawed our way back. I think it's interesting that Goldman's make the point to us this morning. We've just had that conversation with Goldman Sachs, which is French bonds were mispriced anyway, and so there was a moment, let's say, of repricing. But I mean, to a French person and a Greek person, this is a very controversial conversation about the price of your bonds in Greece and France.
Yeah, they hate that comment.
They really don't like it.
I mean, but does it kind of go against this big asset, this big risk rally that's going on, that you can have a risk rally in the face of this happening to governments? Look, maybe they're idiosyncratic, but it certainly does challenge the status quo that we've had in decades past.
Well, it's a great tagline. It's the political economy. That is certainly going to be the byword through now to the end of 2025 and beyond. Coming up, we'll get back to crypto because we're going to talk about what's going on in Bitcoin, finally hitting the six figure. This asset is now worth over $2 trillion. Context matters on Bloomberg. It is Bloomberg Brief. I'm Manus Craney alongside Danny Berger in New York. Front pages. This is what's making the headlines around the world. The New York Times leads with a gunman who fatally shot the United Healthcare CEO Brian Thompson. He remains at large. Authorities describe the attack as targeted, with the motive still unknown. The attack happened outside the New York Hilton in Midtown, where the company was hosting their Investor Day.
Yeah, truly devastating story. Our thoughts go out to all of his family. Next, the FT has this. OPEC Plus is expected to extend current production cuts when it meets today. It is, though, waiting to see how President-elect Trump imposes oil sanctions on Iran and Venezuela. It has repeatedly postponed pumping out more oil in a falling market.
And on Bloomberg, we've got Bitcoin finally breaking that $100,000 psychological level. This is after President-elect Trump picked the next SEC chair. Paul Atkins is a veteran financial regulator and a fixture in Washington's conservative financial circles. Atkins has been a strong proponent of the digital assets. I mean, it's going to be a shift in tone and change from Gary Gensler.
It also, I saw so many Bitcoin people excited about yesterday when Powell talked about Bitcoin, basically saying, oh, it's like gold. It's not going to threaten the dollar. He was actually kind of downplaying it, saying it's more like gold. But everyone was like, hey, Chair Powell talked about Bitcoin. A reason to buy. Anything's a reason to buy right now.
All you need is now a new sovereign fund, maybe in Bitcoin, or a new fund.
Why not?
Why not? We're going to catch up with RBC's Amy Wu Silverman. Let's ask her about a little bit of volatility in crypto. Let's take a swerve.
From our global headquarters in New York, welcome to Bloomberg Brief. Danny Berger alongside Manus Craney. Let's set your agenda.
Fed Chair Powell delivers a message. We can afford to be cautious on rate cuts. And a crypto milestone. Bitcoin tops $100,000 as President-elect Trump nominates Paul Atkins to the chair of the SEC. Political chaos in France as Macron's government falls and the search begins for a new prime minister. Danny, good morning. Go on the Bitcoin.
Well, not just Bitcoin, but yesterday, this equity market, a 56th record gain. So far, it looks like we might snap 11 gains out of the past 12. For a little change this morning, NASDAQ futures underperforms after outperforming yesterday. Meanwhile, for this treasury market, despite a Jay Powell who said we can be cautious on rate cuts. The economy is in good shape. Daily saying we don't need to be urgent. Yesterday it was yields down. Today it is yields up as we head into tomorrow's jobs data, up about 2.7 basis points for your 10-year yield at 4.2%. And here's the asset you wanted, Manus. You asked for it. I'm going to give it to you, $102,000. The bears are going extinct.
The bears are going to be extinct. This asset is now worth over $2 trillion. And you just look at some of the market caps of those other companies. NVIDIA over $3.6 trillion. You've got, there's very, very few assets out there that are worth more than $2 trillion. But the question is then, what is it, what is the ripple effect of that onto the rest of the market? The SEC appointment, Paul Atkins, that's part of the alpha. And of course, we know the president-elect is a big bull on this.
Yeah, and we're going to talk to Amy Wu Silverman in just moments. I'm really excited to have that conversation with her. But we also had Powell yesterday, who also reinvigorated the animal spirits. But my favorite part of the interview was, Manus? When he ended it by saying the word economy backwards to prove that he knows the economy forwards and backwards, of course. And Andrew Sorkin looked at him and was like, what was that? And moved on. That was the best part of the interview. Yeah, and the Bitcoin wasn't going to be a challenge, in terms of the dollar. But this economy, it is the envy of the world. The words of the chair himself. And again, forwards and backwards. Well, Manus, everyone is all bulled up. I want to show you the Conference Board stock expectations. This was pointed out from Bank of America, and this is just remarkable. Over the past 40 years that they've been doing this interview of do you expect stock prices to go up, 56% of respondents said they did. That is the most ever. The bears are extinct. Joining us now is Amy Wu Silverman, head of derivatives strategy at RBC Capital Markets. Amy, everything is rainbows and unicorns and butterflies. Everybody is bulled up. The bears are extinct. How worried does that make you?
That very sentence makes me a little worried, to be honest with you. No, look, when we look to the volatility markets very near term, it appears quite sanguine as well. So, possibly we'll get that Santa rally that we all want for Christmas. But when you look a little bit longer dated, and, in options, longer dated is really 3+ months, there is a little bit more uncertainty. So that term structure is steeper. It suggests that while we might be a little bit complacent about the near future, there are a lot of potential worries about what's going to happen first quarter of next year. And that is something that I am looking at.
Look, we'll dig a little bit deeper into the volatility skews in a moment. We've got to ask you, Bitcoin above $100,000. It's a big psychological level. It's also got asset implications and volatility implications across assets. What's your first take when you see that kind of momentum, Amy, this morning?
Yeah, the one thing that I watch very closely, and, I was joking with you earlier, but I'll have to add Bitcoin and Ethereum back to all my correlation matrices, is historically, Bitcoin has been a very correlated asset to equity markets where it is actually supposed to be a hedge. Now, my question is going forward, as there is more institutional adoption, as there is a friendlier regulatory framework, does Bitcoin as an asset become more like that hedge, or does it still continue to be a risk-on asset, which is what we've seen? And that, I think, is going to be determinative of what kind of function it's going to serve, not only to equity market participants, but just to people overall.
Well, last time we saw Bitcoin having the frenzy it did, it was lockdown times. Everyone had all this extra stimulus cash. Everyone was moving down to Miami with all the money they made from Bitcoin. And they were also putting that money to work elsewhere in the equity market and things like meme stocks. Amy, do you see any of that tinge of frenzy in other corners of the market starting to pop up too?
Yeah, I think that's so interesting because, again, if you go back to those correlation matrices, your GameStops of the world, your AMCs, your crypto, those are all highly, highly correlated. And, not because, frankly, it was probably the same people who owned all of them. And when that wealth begets in one pocket, it obviously begets in the other. You don't see that skew inversion, which is how we measure that exuberance right now. So possibly it's becoming more decoupled. The other aspect I would say is, to me, what is interesting is I think the industry is to some degree growing up. I personally have seen a lot more client adoption, more institutional adoption. So, I don't think it's the asset that is just simply an asset of retail traders anymore, and possibly won't be going forward either.
Well, what surprised me the most, Amy, was when I looked at the volatility within the bond market. The bond market volatility is a 4-month low. And then you get this messaging from Powell, maybe about a little bit of caution, but the rates market still sees a 77% probability of another cut. If we go into a pause zone in 2025 from the Fed, how dislocatory can that be, or disruptive can that be to volatility?
Yeah, so this is one pocket that I think is potentially underpriced, Manus. One thing we saw was there just tends to be these absolute knee-jerk reactions when events are over. And I think the U.S. election being so clearly in Trump's favor, the red sweep being so clearly in Trump's favor, took out that tail risk we had been pricing of a contested election. That's why you saw risk premium so high, that volatility risk premium going into election, was really quite crazy. But I think to some degree, you did take out that concern, but you took out a lot of concerns with it that probably were fairly valid. And one of them is just this idea that our rate strategists have of a very short and shallow cutting cycle. And so if that does come to bear in 2025, I think that's one reason why, again, you see that longer term volatility term structure looking the way it is.
Amy, one of the things you point out in your research is a phrase that Manus and I have also heard a lot, and this idea that what acts as a put on Trump, what acts as a hedging mechanism, is this equity market, because he cares about where the Dow Jones goes, and therefore it's another reason to be bullish, because he's not going to do something that upsets the equity market. What is the risk in that line of thinking?
Yeah, you would not believe the kind of circular conversations I've had with investors where, I say one thing, they say the other, and the final pushback is, but Trump uses the equity market as a gauge of success, so it'll be fine. It's just fascinating to kind of delve into what I think is the backstop in a lot of investors' minds. And the one thing I would say to that is, especially if this tariff situation goes into enactment, it is not just up to the United States, but other countries can have retribution. There can be things that China can do that, that we frankly have already seen China do, other countries do. And so I think it becomes this question of control. You do let loose some of these policies, and certainly there's going to be actions that are not accounted for. And I think that's where these volatility potholes will occur into next year, and that are probably underpriced, in particular, probably from the rates volatility side.
Amy, talk to me about where we are with forward volatility, because we're going to begin to know policy. So we've got volatility now, but then we've got policy live in the first 3 months of 2025. What is the difference between vol now and vol on the forwards?
Yeah, it's a great question, and one thing I'll say is for listeners who are not kind of trafficking knee deep in volatility all the time, the one thing I'd point out is that your spot VIX is not necessarily the best measure of the concern you see in the market. So, that spot volatility measure is not really showing you that whole term structure. So essentially what we think 1 month out, 3 months out, 12 months out, those are all steeper, and that's true for S&P as well. The second aspect of this is something I've talked about before, which is this paddling duck market. So it's just this idea that, a duck looks really calm on the surface of a lake, but his feet are just rapidly rotating underneath. And you have that on the sector level right now. So this idea of dispersion is going to play a lot into what happens next year, which is something we've already seen. You see violent moves in healthcare one direction, but you see violent moves in financials in another direction. What does that end up doing on an index level? It ends up canceling out the movement, but actually there was a lot of movement underneath. And we probably will see that in the future as policies go into enactment.
Okay, Amy, it's the perfect swan on this show every day. A swan on the top of the lake and the feet are going like 90 underneath. Amy, thank you very much. Amy Silverman there of RBC setting the agenda on volatility. Let's just give you a snapshot of what's going on in the oil market. Danny, we're up 0.5%. We've got a couple of headlines coming through on OPEC. OPEC are meeting. We know that they've been extending and delaying the add back of oil to the market. They say OPEC Plus has a deal in principle to delay the output hike. That's pretty much consensus. And I think this is something that Helima Croft had said is prudent is the byword, and that's what OPEC Plus talk about often.
Well, we know that they were in some ways waiting to see what a Trump presidency could bring, because last time around, Trump was kind of like the unofficial other member of OPEC, basically telling Saudi that they needed to cut back on their oil exports and their oil production in order to help U.S. producers. This time around, though, Trump wants low oil prices, and I wonder what his ability is going to be to have Saudi, to have the others, to put that supply on the market to make sure that oil prices stay low.
I think it's interesting when you look at the data this morning, the USA rigs are pulling out 13.5 million barrels a day. So that is a record oil production in the United States of America, which is, music to President-elect's ears. But here's the conundrum. To have really, really low oil prices, Danny, at $50 or $30 does not square with a fracking industry which is vibrant and profitable and delivering. You cannot have both, which is what Bob McNally at Rapidan told us just last week.
Yep, but of course his promise, drill, baby, drill, and low oil prices.
Yep.
Okay, we'll have more coming up shortly after this break.
It is Bloomberg Brief. I'm Menace Grenny alongside Danny Berger here in New York. President-elect Donald Trump picks Paul Atkins to lead the Securities Exchange Commission. That boosts Bitcoin. We're blowing through the $100,000 mark. For more on what it means for markets and regulation, maybe, Mike Shepard is with us in Washington. So, Mr. Atkins is back at tour de force. He was a former SEC commissioner. That was 2002 to 2008. How different is he going to be to Gary Gensler? Good morning.
We will see a big change, Manus, is in the area of digital currency. And this is why we're seeing such a big bump in price and crossing that magic $100,000 threshold in value. In many ways, and the head of Binance put it today, as a signal that cryptocurrency will now be moving toward the mainstream. Paul Atkins is somebody who, since leaving the SEC more than a decade ago, has advocated for digital currencies. He sees it as something that is good for the economy, good for innovation. He's a supporter of fintech, and he's somebody who will carry out Donald Trump's promise of making the U.S. a destination globally for the crypto industry, and something that will be a strength and an asset for our economy here in the U.S. Now, when we think about Paul Atkins, we have to remember he's not just a one-trick pony when it comes to digital currency. While he's a proponent of that, he has also left a mark as a veteran financial regulator. He is somebody we can expect will come in and not only reverse the crackdown on crypto under current SEC Chair Gary Gensler, but also try to reverse the trend of heavier fines that we've seen in the Gensler era, and try as well to maybe remake the agency in a way that reduces the regulatory burden on some companies.
Shep, Stephen Dennis and the Bloomberg team also writing a story earlier this morning that Elon Musk is going to be heading to Capitol Hill. He wants to discuss the Department of Government Efficiency, which of course is an outside task force, not an actual agency. What does he need from Congress? What's at stake with these discussions on Capitol Hill?
Well, this is just the beginning of a long conversation with lawmakers now on whatever they may want to do through this Department of Government Efficiency that Donald Trump has tapped Elon Musk and Vivek Ramaswamy to co-chair. The idea is to reduce government spending, to try to reduce government headcount, but do so in a drastic fashion. And we saw, of course, Elon Musk at Twitter after buying the company and then rebranding it as X. He slashed the workforce there. And so there are concerns that he may try to do the same thing with the federal government. Now, we have seen this movie before with prior administrations, trying to reinvent government under the Clinton-Gore administration. And other presidencies have also tried the same thing to reduce the federal footprint, to cut spending, but it's easy to say, hard to do. Most federal spending is actually in entitlements. So when you get to discretionary spending on agencies, it gets tougher. And the thing to remember, Danny, is that 80% of the federal workforce is outside the greater Washington, D.C. area. So that means that in every member's district, there is likely a federal agency that has an office that provides jobs and provides services as well. So they need the buy-in from Congress to actually start making some of those changes, and they would need Congress to actually enact them and carry them out as well.
Yeah, and how would that look for Trump if his efficiency is effectively getting rid of jobs and someone who liked to style himself as a jobs president? Shep, so great to get your thoughts. As always, Michael Shepard there. Now, over to politics in France. The latest poll shows that a majority of French people want President Emmanuel Macron to resign and hold an election next year. That's according to Cluster 17 for La Pointe magazine. And of course, that's after the leader of France's far-right party, Marine Le Pen, said that she is not calling for President Macron to step down after toppling his prime minister in Wednesday's confidence vote. A lot to keep track of. Helping us to do it is Bloomberg's Kriti Gupta, who is in Paris. Kriti, what are the next steps for this government, which has now fallen?
Well, the next hours are crucial for Emmanuel Macron. He's due to make a statement at about 8 p.m. local time here in Paris, where he is expected to address the nation and actually explain the very question you asked me, Danny. What is he going to do? Because he has two options here. He can choose to really take on Michel Barnier as a caretaker prime minister, hold on to him to just kind of keep things steady, keep things flowing, and then continue as he's waiting to kind of create a new cabinet, continue to pursue the budget that is not able to make it through Parliament in 2025. Option number two is to go back to the drawing board, take Michel Barnier out of the picture, who, by the way, has already indicated that it's not really in his best interest to come back in sort of any capacity now that this no confidence vote has passed. But that really puts the spotlight on Macron to pick someone who he thinks can survive no confidence votes. Because as Michel Barnier pointed out in that no confidence vote yesterday, whoever takes his place is going to face the same pushback from Marine Le Pen, as well as the folks on the far left as well. And that's the trick. That's the kind of puzzle that Emmanuel Macron has to put together.
Well, I can't wait to see what President-elect has got to say about it when I think he's visiting over the weekend. So that's going to be interesting in terms of if there's any comments. Talk to me about this. If Marine Le Pen doesn't want Macron's scalp, what does she want economically for France? Because this is about the real economy, and she has called this original budget, the thing that brought down Barnier, as the budget was toxic for the French.
Exactly. It comes back to the same issue that we talk about in the UK and certainly in the United States, affordability, because French citizens, like a lot of global citizens, are feeling the squeeze. They're also not super happy about the idea that to stem the deficit, they have to increase taxes. And that was a key part of this budget that Michel Barnier had talked about, increasing things like electricity taxes, pulling back on things like drug reimbursements. Those were two key concessions that he had made that Marine Le Pen was pushing to make life more affordable for French citizens. But you made a key point as well that President-elect Donald Trump is visiting Paris on this weekend, really on Saturday, for the reopening of Notre Dame, the cathedral, of course, after the refurbishments. This is important because tariffs were mentioned in that vote as well. He is the scare factor in the room that Marine Le Pen and others are trying to protect France from.
Indeed, indeed. Kriti, thank you very much. Great reporting in Paris there, Kriti Gupta. We have more earnings hitting the tape here in New York. Retail earnings this time. Dollar Tree and Kroger will hit the tape. Dasha Afanasieva is with us. Dasha, we are very familiar with the bifurcation, the upper end of the retail market and the bottom end in terms of inventory. What are we going to learn today?
That's the thing. The lower end is struggling in the US, but I think it's the added uncertainty that's weighing on investors that unfortunately we're not going to get loads of answers on things like tariffs and how that's going to further push up inflation and potentially impact consumer spending further. And the other bits of uncertainty still are weighing on, say, Dollar Tree, which doesn't have a permanent chief executive; it only has an interim. And yesterday, its CFO also was announced to be stepping down from next year. So they're looking for whole new management. The other big question is what we'll end up doing with the underperforming Family Dollar too. So there's a lot of uncertainty from outside these retailers and from inside that is compounding these issues that you mentioned of the consumer that's spending less because they can't afford to spend anymore.
Well, uncertainty for Kroger, and will they be able to acquire Albertsons, something the FTC had sued to block? But of course, they're going to have a new administration coming in. Is this kind of just like an interim earnings of maybe things kind of float along, but we all expect a deal to happen with a more friendly regulatory environment?
It definitely, the Trump factor is very heavy here because it may just end up being a question of timing. Is it possible to kill the deal before the new administration comes in? But I wouldn't say the deal is a chunky one. It sort of brings Kroger's revenue is around 150 billion, and then Albertsons is around 80 billion. So it's a very significant acquisition, but they still need to get those fundamentals right for the core business. Sales growth is expected to be 1.7% when you exclude fuel, which isn't as bad as some of the retailers, but it is still dwarfed by Walmart, of course, and contending with a lot of these same issues of how to get to the consumer and persuade them that you offer the best deal.
All right, well, both those earnings coming before the market open. Dasha, thanks so much. Dasha Afanasieva there. Okay, coming up, we're going to get you set up for your trading day. It's your Bloomberg Brief. Let's get you set up for your trading day on this Thursday. We're going to get retail earnings coming from Dollar General and Kroger before the bell. Then we get another round of jobless claims. That comes out at 8:30 a.m. Eastern. Then a touch of more Fed speak. Richmond Fed President Tom Barkin will be speaking at 12:15 p.m. Annis, what you got for movers this morning?
Danny, a couple of individual names. Micro Movers, Applied Materials. We've got cutting to underweight there, down 2.25% at Morgan Stanley, following another cut from President Capital a little bit earlier in the week. Synopsys extending the drop post their earnings. Macro headwinds weighing on the outlook. And Coinbase, I mean, you just got to look at Bitcoin to understand that. We've got Coinbase Global rising on the back of this, powering through $100,000 and change. Danny.
And we'll leave you with a look at Bitcoin. Again, still moving higher this morning, up more than 4.5%. $102,000 is where we stand. The rally powers on.